What's up, my fellow traders? Hope you all having an awesome weekend. It's not a weekend yet, but I'm recording this video on Thursday because I need to go somewhere really important over the weekend. That's why I don't want to miss this video and I want to give you an update before I go. And as usual, weekends video are something where you will learn tons of knowledge. So if you're someone who really wants to learn and understand trading in more depth, then trust me, the first part of this video is going to give you tons of knowledge, and there are so many mistakes you could avoid if you watch the first part of the video. So I'm going to jump on straight to the Japanese yen pairs, which is trending really higher, and how we managed to enter the trades within this trend, and also the speculation of the intervention of the Japanese yen, and how first take profit is hit, stop loss is hit, and then we went on to the other direction. I'm going to give you some tricks and tips that will help in your trading journey. And I'm also going to record a podcast hopefully by next week where I'm going to talk about my trading journey, how I started, when to leave a job, how I left my job, what I used to trade, what is my daily routine, my trading psychology, everything you're going to learn. So it's going to be fun, hopefully by next week. And then in the second part, we're going to do analysis of natural gas, gold, silver, and crude oil. So in the first part, there are few trades. It is still running, so I'm going to show you those trades that is happening today, and then hopefully by Friday I'm going to record the second part of the video where I'm going to show you the results of those trades as well. Now first, we had a winning trade. Now this pair has been trending nicely, and Japanese yen pairs trend awesome. I remember I made good amount of money in USD Japanese yen a couple of months ago. I still remember that trade that was somewhere right here. That was 1.421, 263 pips, then a loser and then a winner and winner. So I had some nice badass trade here in Japanese yen pairs. But now coming back here, so there was a news out there that the Japanese is going to intervene and we shouldn't be trading this pair. So I always say when the market is trending, we are going to ride along with the trend. So taking an advantage of a trending market, I entered this trade, and that was also sent to my members. Right here, as you can see on your screens, this was the trade I've sent to the members, and we entered this buy trade, and that was nice. Take profit hit off for me 117 pips because I managed this trade here till my support zone, resistance area, from where I was looking to enter my sell trade, and that was a major zone, and that was an all-time high of this pair, and there was no other zones above, because if you go back, look at the monthly time frame, that was the only level, that was an all-time high in 2007, from where the price dramatically fall. So at this point, what are we looking at? We are looking at selling this pair, of course, because that was an all-time high and that was also a resistance level. So we are not making any mistake. The analysis was going according to the conditions, right? So we had a bearish engulfer right here. So I entered right here, and at this point, of course, we'll be thinking that the price is going to push lower, looking at this bearish engulfer, looking at this monthly resistance, right? So there was a more likely chance the price is going to push down, right? But what happens is the price hit the stop loss, right? And after hitting the stop loss, right, how much is pushed higher? So from the stop loss, if you calculate, the price pushed up 115 pips. Tell me something. If you are someone who just want to hope that this pair is on an all-time high, and you start selling, right? Because every time the market pushes up, what you do? You sell in a hope that it's all-time high, it's definitely going to push down. So let's say you have not put your stop loss here, right? And the price just gave a pullback. Now you have a relief that price is going to reverse, and that could be a reversal. And if you're someone who is struggling trader, who have no rules there, you wouldn't even come out at this point looking at a minimum loss. What you'll be thinking? You'll be thinking that if the price came all the way here, it's going to fall from here as well. So in that hope, you just hold on and hope that the price is going to fall from here, and in that hope the price starts to push up. Now I know the psychology of struggling traders or the beginners. What they're going to do, every push up they're going to start selling. So you see these wicks, these are the action of these traders. They sell, then the buyers push up. If the market pushes up, what they do, they start selling again in the hope, yeah, that could be a reversal, right? So these are the mistakes the beginners or the struggling traders will do. But us, the professional traders, we bought here, we made money, we came out, we had a condition to sell here, we had a stop loss hit, we came out because the stop loss is hit. What we're going to look at now, we're going to look at the next condition. After the stop loss is hit, you come out, look for the next trade, and the price is telling us after breaking above this high, I'm going to push up in a trend and keep on trending higher. right? Unless we are broken below these lows and then we have a reversal. But the price struggling to break below the lows when the price is making higher highs, and without breaking below the previous low means we are still in an uptrend. So mu high without breaking this low, right? If it was broken right here, that would be a reversal. But the buyers wants to keep the price pushing higher, and here it pushed higher. That is the psychology behind the traders, and that is a mistake I don't want you guys to do. Once your stop loss is hit, stop hoping and keep on selling if the market is all-time high. Yes, I see that. That is why I entered my trade with all my analysis, but that did not work out. But instead I changed my direction. What was that? I use this level now as my level of support instead of resistance, and it is not something I'm just saying. After my stop loss is hit, I have mentioned this level. I've sent these zones to my members, and let me show you that as well. Did not hold right here, and that hit my stop loss as well. So unfortunately there was a trend continuation now as we are broken above the first stop. So you know the rules. If you are broken above the first stop, if stop loss is hit, looking at the next condition. So hopefully we get a good condition here to look for another buying opportunities. Part of the game, part of the trading. Nice one. So you see, I've already mentioned this to my members only a live session as well. And this is not an alien for you. I've been talking about these type of entries in my free YouTube videos as well. So there's no excuse that you can say you don't know these type of rules if you follow me from a couple of years. Now, once the zone was broken, what I was looking at, a good condition. Now, I know that doesn't look like a good condition to you, but if you follow me, you know I take my trades on 1 hour and 4 hour time frame. So going back on 1 hour time frame, what do you see? You see a price pull back, right? And then forms a double bottom with an engulfing candle, and that was my entry candle, right? And you see how nicely the price pushed up, and that was something I'm managing this trade, and I will keep on managing that. And you can also use 50 EMA as your trailing stop. That's totally up to you how you want to manage your trade. So I'm still managing it. If we are broken above, I just want to capture as much as profits from this Japanese yen pair. You see how nicely the direction has been changed. Stop loss has been hit. There is no hope. There is nothing that we can start selling just in the hope that price will push up. I'm saying that because I swear I used to do that as well. And I still remember talking to my friends, yes, this forex pair or this commodity is all-time high, let's start selling it. And trust me, I've blown up my account like that. Not a lot of money I've lost. This is something I'm going to leave it for the podcast, but I have lost money there and price keep on pushing higher. It did reverse. Every trend has to bend, but we need to see the signals. I've already mentioned that we need to see a break below the previous lows, right? So a good example of the price of a change in trend, a good entry condition after the stop loss hit, right? So you see winning trade, losing trade, and a winning trade. We are still up. We are still a winner. It is not an alien for us. This for the zone that was sent to the members to pay attention to the zone for the entry condition, for the possible entry condition on smaller time frame. So this is all I can do for you. I can mark the zones for you, for the members I'm talking about. Of course, if you are my student in MMTA course, you should know how to mark these zones on your own. And if you know how to mark these zones correctly, you have seen the game of trades is going to go up to the higher level, to the next level, and there is nothing that can stop you to become profitable trader in time, not instantly, right? So this was a zone sent to the members. I knew that this is a possible zone where we can get a pullback to till this zone, and then we're going to get a possible push up. And that is exactly what has happened. We had a pullback to this zone, condition, change in trend, we bought, made money, right? So that is how we need to be trading with the rules. I'm going to show you one more zone, which is USD CHF, right? A zone that was sent on with the same report. Now, I've already mentioned this zone to my members that it is an area from where now I'll be looking to enter my valid trend continuation bearish trade. Trend continuation mean when the price break below the support, it will likely pull back to the support and price will likely push lower. So that is why I call it a trend continuation zone, a reversal trade. Now I know that was above 50 and 20 EMA, but for the counter trend trades, we are looking at these zones that must play out. If you know how to draw these zones, you see how nicely we were able to capture this trade. Now imagine there is no zone here, right? Now imagine, let's remove this. It is nothing here. How would you know that the price is going to fall from here? Not only fall, if you need to know the exact amount of stop loss and take profit you need to set. That is what I teach to my students as well. That is something I talk in my videos as well, just a basic, but with the exact stops and targets rules I teach to my students in my MMTA course. Now here, if you have no idea, what would you be doing? The mistake that traders do when the price is pushing higher, let's say the price is here, going back to the replay mode, they'll be looking at this level, right? They will be looking at this level and they will be more likely to mark a zone right here. If you go back and see, yeah, good level, and it could fall, right? But my rules are different. For me, my zone was right here, and that was my rule of marking the zone. And if you see here, price push up, and yes, we had a pullback, but that zone was not strong enough to hold, right? But it starts to push up. Instead, what we did, we bought here, right? That was a trade we bought with a head and shoulder pattern, right? And that was also mentioned in my live session. And for me, the zone was right here. My likely zone was here. And you see, when the price pushes up in the zone, we had a nice double top pattern. But that is more like a bearish engulfing aggressive entry, a swing high bearish engulfer. Let's not take it as a double top. Let's take it as a swing high. That is a valid entry according to the rules I teach to my students. And with that, not only one-to-one, I always recommend newbies, traders to trade with one-to-one, gain your confidence, have a more amount of winning trades. Once you are profitable, then come back and manage your trades the way I teach to my students as well. So here, 1.421 target has been hit easily here on this pair. And this was not a guess. It was not a guess that price is going to push down from here. This was a zone that was exactly marked, sent to the members last week. So you see the power of being patient and trade at the right place and with conditions only. Then we have this pair, a nice trending pair. We entered right in the live session. That is why it's very important if you are someone who are still my member, Priority Plus member, and you couldn't attend a live session, make sure you watch it later on, because in the live session we set some entries and you can always come back and check those entries and take your entries accordingly and set your stop loss and take profit both. So this is one example right here. We took an entry. That was also an entry. Hit the take profit, and we had another pullback. We have an entry right here, and let me show you what we discussed in the live session as well. Yeah, that's a valid bullish engulfing pattern. Yeah, if you want to enter here, that's a good price to enter. Set your stop loss below, which is something like this. Let's say we have entered here. Yeah, I'll keep it like this. I'll adjust my stop loss and take profit. But for now, this week so far, till today's date, we have just took one trade in the priority group. Of course, I've taken the other trades which I've just shown you, which is still running, including New Zealand Japanese yen. That was not a trade I've sent to the members, but the zone was sent to the members, and from those zones you need to look for the entries. If you're confused, email me, DM me, and that is how you learn. That is why I always say it is not a signal group where you get tons of signals. It is a group where you will learn the strategies, where you will learn the directions. I'm going to give you the directions from where we can get a possible reverses, likely push up or push down. With that, I also send you these entries 2 to 4 times a week so that you see how I take my trades. So this was the one I've sent to the members, and as you can see, the Euro USD, right? And right here, this was a trade. Price is recently broken above the zone. As you can see, this recent zone that was broken, and I was looking for the pullback. That we had a pullback followed by what? A bullish engulfer right here. That was above 50 EMA. So that was an extra confidence for me. Why not entering this trade? So I've entered here. The initial targets has been hit. Like I said, for beginners, I recommend 1-to-1, and I'm up on this pair 78 pips, and I've set my take profit right till here. It is an area till I want to exit, but it is now in the resistance area from where we can get a likely pullback. This trade is running, and let's see how it goes. I'm going to update that trade as well with this video. Just an update, guys. So next day my target has been hit, as you can see, nicely hitting full targets, managed till resistance right here. A nice 92 pips take profit has been hit here on this pair. So that is how we entered this trade with condition, no guesses. We did not enter this trade anywhere in this consolidation. After this range has been broken right here with a pullback, we entered this trade and sent to the members as well. NZD USD nicely pushed lower from the resistance level. Then we were looking at a level of support last week, not this week, last week. As you can see, 24th of June, I've sent this report, and as you can see, the price nicely bounced up from the area right here, even though that was not a valid bullish engulfer, but that is a valid pin bar, and that nicely pushed the price higher. We had a bearish trade as well. Bearish trade, cut the profit, buy for the bullish trade, and that was enough to hit your profits at according to the stops and target rules that I teach to my students. Just follow this 4-factor observation, conditions, entries, and then you set your targets. So observation, we are looking at the downtrend and looking at the zone from where we can look for the possible condition, and then we have a condition, then we have an entry, then we have a target set. You're going to decide how much target you want to go for. So that's it for the first part of the video. I hope you got a value out of that, and I hope you have learned something out of that. There was a lesson of your trading psychology, how you manage your trades, how you not go with the FOMO. A good example of this trade, I've recently shown you a FOMO that was keep on selling, looking at the market at all-time high. But instead, the professional traders, they change the direction and go with the trend. So that is how we need to be trading, and that is how you will learn and become professional trader. Now, if you are interested to learn full trading system, everything from basics to the advanced level, all the strategies, the way I put my stop loss and take profit, and different strategies have a different amount of stops and target, and I'll tell you exact numbers of how much stops and targets you need to put, and there is no way to be found on the internet where they will tell you exact amount of stops and target. They will just tell you the generic targets here and there, but I will tell you the exact numbers, what numbers you need to put, and you see how nicely the price is playing out according to my strategy. With that, right at the premium plan with the full system, with that you also get standard and standard plus plan free for the lifetime. So just a one-time investment, and that is all you need to become a trader. And before you join, make sure you watch a video here what to expect from the course. So let's start our analysis, starting with natural gas, gold, silver, crude oil, and also going to go through copper today. So starting with natural gas. So let me show you what I've said in my last video so that we can understand conditions and entries. Capital.com. Now we can use this zone and we can use the Fibonacci levels from this candle, something like this. So here on this platform, you can either go for aggressive entry, which is a sell limit order at 50% retracement, 180R, your initial targets, and then you can go till 1.618 retracement. So that is something for aggressive trader. Stop loss can be above this pattern. What happened here on NEMEX platform? So as you can see, price did push up. We have a pullback if you are trading on this platform. Here on NEMEX, look at your own platform, whichever platform you use, look for your entry condition according to that platform. So right here on NEMEX, we have an entry condition. Right here, a sell limit order has been triggered. Right here with this 50% retracement of this wick, and then the price quickly pushed lower. So the target was 180 and 1.618 retracement. Nice one. So as you can see, the aggressive entry 50% retracement has been hit right here, exactly how we mentioned in my last video, and now we already have an aggressive entry hit, which is right here, and 1.618 retracement target has been hit as well. So I'm going to talk about the further entries here on all three platforms. So starting with Capital.com, as we have a condition now, 180R target has been hit according to the 50% retracement pullback. As you can see, 3.2, which is the low volatility at this point, and price pushed down around 2.5, more than 280R. So we have a target hit, a smaller target has been hit. For the bigger targets, that looks something like this 50% retracement, stop losses above this pattern, and take profit something like this. That is something for the bigger target, and I'm still expecting a price to head lower and hit 1.618 retracement. So that is something we call, if you are managing this trade, this is an area till where you want to manage your trade. But if you're someone who want to look for a less aggressive way to enter, again, I want to see a pullback, and now that can be a big pullback. Wherever we get this pullback at 50 EMA or below 50 EMA, followed by bearish engulfing pattern, in that case we are good to go short. Now, in case you're wondering, that is not one of the valid bearish engulfing pattern. As you can see, the candle opens below the previous candle. That is why it is not a valid. It must be an engulfing candle that fully engulfs the previous candle, the whole body. That is what we call an engulfing candle. So that's why I want to see a pullback followed by bearish engulfer if we have that. If there is no pullbacks, then we are looking at this level. Let's say the price just straight away fall to the zone below. That is an area from where I'm expecting some good bounce. As you can see, this level has acted as a level of resistance, support, and support. Previously, as you can see, a level of significance. So that is why I'm looking at this level for the possible a good bounce from here. Now this level right here, if you want to mark these on your charts, is 2.857. that goes up to 2.230. From where we are now looking at a possible push up, and we are looking for the conditions like bullish engulfers or double bottom entry condition. Pin bars or 382 candles is also one of my entries, but preferably I would like to see a bullish engulfers or double bottoms. If we have that in this area, only then we're going to enter buy trades. Without conditions, we are not entering any trades. So that's what I'll be looking at this point. Aggressive entry has been hit, and this is the place till where you want to manage it. For less aggressive traders, pullback, bearish engulfers, 180R initial targets, manage it till this recent zone right here, or you can go 280R, and that's totally up to you. Now here on NEMEX, as you can see, the target has been hit, 1.618 retracement has been hit. So all I'm looking at, just a pullback entry. So once I entered my trades and once the target entry has been triggered, I do not enter my trade again using the same methods. So for now, I'm just looking at bearish engulfer below 50 EMA. If we have that, let's say we have a good pullback below 50 EMA and price forms a bearish engulfer, I'm going to go short again. Or if the price retests the level above that has been recently broken, in that case with the pullback of bearish engulfer, in that case I'm going to go short again. So if the price continue to push lower, zone below, which is right here, 2.132, that goes to 2.260, a zone from where I'll be looking to enter my buy trade with bullish engulfers or double bottom entry patterns. And this is not one of my valid bearish pattern. In case you are wondering, the candle opens below the previous candle and not a valid engulfing pattern. So keep an eye on this zone. Once the price is inside the zone, we are good to look for the buy trades with conditions I've just mentioned. Now here no wonder, again not a valid bearish engulfer right here. So all I'm looking at, pullback and a bearish engulfing pattern. Now in here on this platform, if you are using this platform, if you want to use Fib tool, from here you can use the upper level for the pullback. So here 50% for aggressive entry and 1.618 retracement can be your bigger targets. Otherwise 1 to 2 ATR will be your smaller target. Otherwise pullback followed by bearish engulfer, I'm going to go short with a valid bearish engulfing pattern. It is not a valid bearish engulfer. As you can see, the candle is open below, and the zone below for buy trade, a good level right here from where the price has previously bounced up and bounced lower, which is 1.965, that goes to 2.057, from where I'll be looking to enter my buy trades with bullish engulfers or double bottom entry confirmation. We have gold. Gold is just now ranging, taking a breather, and soon we can see a good breakout. So wait and see. Under the price is ranging sideways, we can still expect some sideways movement, something like this before the price will break above. And I'm looking at this level right here, which is 2375.66, that goes to 2387.44, from where we're going to look for bearish engulfers or double top entry confirmation. Awesome. So as you can see, with the break of this box, how nicely the price collect the liquidity range and then it pushes lower. So that is what we call an accumulation, and after that price decide to push and head higher, and our bias is bullish as well, looking at the EMAs and looking at a nice push up and break above the trend line. Gold is now inside a major area and we do not have any other zones if you look left. So that is why if I see a condition like bearish engulfer inside this area, only then we can expect some pullbacks from here, and that pullback will be enough to hit your target. So looking at the ATR at this point is 9. So $9 will be your initial target, and then you can manage to 1.4 to 1 reward to risk ratio or 1.2 to 1 reward to risk ratio. It's totally up to you. If you want to manage your trade, move your stop loss to break even and then manage your trades to the bigger target. So for now, all I'm looking at bearish engulfer, a valid bearish engulfer. If you have that, we're good to go short, as we are now in the level of resistance from where the price previously pushed lower, as you can see right here multiple times. So once we have a condition, we are good to go short. Let's say we have no condition here and price just give us a pullback. If you have a pullback above 50 EMA and price forms a bullish engulfing pattern, then we're going to go long again. So as long as we see a valid condition, we're going to short. No valid condition, we're going to long from here using a bullish engulfing pattern. So that is what I'll be looking at. So keep an eye, these are the conditions I'll be looking at. Once we have broken above this range, in that case we have a confirmation that price is going to hit this level. So we have a candle close and break above this consolidation. Close is very important. We have a good signal of the price to hit right here to the level above. Otherwise, exactly the same on silver, how nicely after the break of this box right here, how nicely we are pushing up. Now we do have a level of minor resistance which is right up there, 32.0, that goes up to 32.51, a zone from where we can expect pullbacks, not reversal. So pullback, if we have a bearish engulfer or double top, we're going to go short using 1 ATR for the targets and keep a stop loss above. If you don't know what ATR is, I've already made a video how to identify candlestick patterns and what the ATR is. It's also in my playlist, feel free to check that out. So all I'm looking at is either a sell condition from here or a pullback above 50 EMA followed by bullish engulfing pattern, and keep on taking longs using 1 ATR for my targets. So keep an eye, have these zones ready on your charts. Sell from here, buy with the pullback if you have a bullish engulfing pattern. Next up we have crude oil. How nicely the price rejected from my anchor level, and let me show you what I've said in my last video. Nicely pushing up and expect some pullback from this previous high. So once the price hit this zone, expect a pullback and a continuation. That doesn't mean you start selling here, but just expect a normal pullback and then price will likely continue to push up. Nice one. So you see how nicely the price rejected, and that was expected, which was mentioned in my last video. Looking at the price action from a couple of years, I had a good idea the price is going to reject from here, and that has happened. So at this point, all I'm looking at a possible red and a bigger green candle. If you have a bullish engulfer, I'm going to go long, but must be a valid condition and must be at 50 EMA. Let's say we get a condition like this. Otherwise, if there is no condition for the next pullback entry, I want to see a break above this high and this anchor box, and then a pullback. Doesn't matter if the price hit the zone. If you have a pullback and if the price forms a bullish engulfer, I'm going to go long again. So I'm only going to take short trades if the price forms a valid condition here, 85.81, that goes up to 88.24. If the price forms bearish engulfers or double top here, in that case I'm going to go short, and a good example of that is right here. From the zone previously we had a valid bearish engulfer, so that is what I'll be looking at for my sell trades. If we have that, we are good to go short. If not, all I'm looking at a break above this high, then a pullback and a bullish engulfer till we get a condition to go short. So that is very important. Pull the money out of the market. Use the ATR for your targets. Let's say we have a buy condition, buy here, exit with 1 to 2 ATR, then sell here, then come out, and that is how we need to make money. We don't need to hold on with the trades forever. Make sure you take your profits as well. Lastly, we have copper. Copper has broken above the consolidation that was mentioned in my last video, that if we are broken below, we're going to go short, and if we're broken above, we're going to go long. So that is what I've already mentioned, that my bias is still bullish, looking at this support area, and the buyers and sellers decided that the price of this particular commodity should be higher. Now we have talked about this entry in my live session right here. The 50% retracement has been triggered, and that is what I'm expecting a price to push up, at least hit 4.781. That is what the aggressive entries target looks like. Stop loss is below the pattern. You can keep it below the EMS as well, just to have an extra protection. So I'm now expecting a price to head higher and hit the targets right here. So that's it for commodities, guys. Hope you're getting value. If yes, hit a like button for me, subscribe if you're new, so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Have an awesome weekend. Take care.